Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Macro Monday, let's take a look at some legacy charts. The market's very happy with the tariff news, which I'll get to in a second. But as far as the global flows report from James at CoinShares, we are positive for the first time in 5 weeks. Most of that coming from BTC, of course. Most of that on the alt side, not coming from Ethereum. And I really don't know what's going to change that. As I said last night, active addresses down, fees down, ETH burn down. Something is going to need to be a catalyst for ETH first before it can turn the corner there. I don't think staking in the ETFs is going to be enough, but we will see. And US being the lion's share of the flows there, no surprise. And I'm very curious what flows will look like today on a very positive day coming off of news that the tariffs now appear to be more targeted than the initial broad tariffs that people were expecting or that was hinted at. And maybe if we have started with this news, the markets wouldn't have been so freaked out. But in any case, we ran some stops through the macro doomers a bone. And come April 2nd, April 3rd, if the tariffs enacted aren't as bad as expected, or if Trump gets the terms he wants with the countries that he's posting a reciprocal tariff to, maybe markets do well off of that. And then from there on out, if we don't see rising costs for consumers or rising inflation versus the expectations, which are still very, very high, then the markets probably do even better. But it's very hard to game that out with any degree of certainty until we actually see what the tariffs look like, because they are changing and very fluid on an hour-to-hour basis on any given day. I'll get to BTC, but for MSTR, we are now looking better and better. We are out of the falling wedge. We are out of the bearish channel. We are above the midpoint of the pitchfork. The W has held. We are now approaching the Kumo twist, which oddly enough, we tend to see a move through that zone for whatever reason. Some of the time, it's a little early to say that this is fully bullish because it's not. No, it's getting there. Ultimately, the cloud is going to have the last say on what happens here. I would love to see this settle in somewhere above 350 in early Q2. That would give all of the moving averages a chance to catch up. That would give the cloud a chance to catch up. But as this stands here now, I'm just getting more and more confident that the MSTR trade idea looks better and better. We could even go, for you crazy kids out there trading MSTX, we can look at that on the 4 hour. Not quite what you'd want to see. I wouldn't want to trade this like edge to edge thing here. I would want to wait. If I'm trading like 5-10x leverage, which is effectively what this is, then you're probably going to want to wait a little bit until there's some actual bullishness besides just a bounce. Right now we've had a bounce, we have a W, we have the div, we have all that stuff, we have an MSTR. Still feels a little early on that side of things. It's certainly early for BTC still, so I don't think there's any reason to jump the gun, because if come April 2nd, things are now worse than expected, then we're going to head right back down. WGMI has also started to bounce at the bottom of the pitchfork there. The pitchfork stuff is super simple. If you're at the bottom and you're bullish, you expect to move a mean reversion to the midpoint. If you're at the top and you're bearish, you expect a mean reversion to the midpoint. If there's a history of this on any asset, then that raises conviction and probabilities because you've seen it prior. So here, the stop loss is still new lows, and we're up in this trade currently. Definitely not a cloud trade. This is a chart pattern, looked bad enough to buy sort of trade, and may stall out if it can get to 20. We'll see. But this trade looks fine at the moment. Now, if you put the two against each other, WGMI against MSTR, it's a bit of a different story, right? It tells you that miners haven't been the place to be, or just aren't the beta that they used to be relative to BTC, and WGMI has continued to bleed against MSTR. Some of the individual miners may look better than this, but the liquidity begets liquidity, volume begets volume, and to some degree, performance like this is a self-fulfilling prophecy because there's an expectation that MSTR outperforms, certainly BTC and likely the miners, then this will continue so long as that's where the attention is. I've heard less and less and less about miners this year since 2024, and more and more and more about MSTR, obviously, because that's what's moving. That's what's doing really well and parabolically advancing higher. So on a relative value basis, this looks very bearish for WGMI. On the other leveraged BTC side of things, BITU potentially starting to bottom as well. Again, it's a little early. It wouldn't surprise me if we get a right shoulder on any of this stuff on spot, on MSTR, because there's still some uncertainty left to tackle here. But this could morph into a multi-week inverted head and shoulders, much like it did into Q4 last year. I think Bitcoin will have an easier time recapturing all-time high than Legacy will. But if one does well, so should the other, right? If Legacy starts to do well, or even start to range, Bitcoin is ready. It's clearly ready today, and it's bounced considerably over the past couple days. This is what the boomers see. This is the boomer view. IBIT's still a 2x from the IPO, right? This was the IPO back here at 25-ish, and it's still at 50. The cloud here looks less bearish than spot. It looks less bearish because it's in the cloud here still. I still think the spot chart's the right chart to look at, but it's interesting to see the differences here, that this is not below the cloud, didn't really hold below the cloud, and still hasn't even fully reset yet. But also something to keep an eye on into Q2. So some of the early stuff is moving a little bit. You're getting a little bit of a mean reversion bounce, some strength coming slowly to MSTR here, but I think collectively it's still a little early. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PBI, DBA, Kraken. Looking at the low time frame BTC chart, we are back above the 4-hour cloud, and the cloud is fully bullish for the first time since January. This looks great, obviously, but it's hard to be certain because we've had plus or minus 4,000 notional on the range. So yeah, it looks good today. It looked decent on March 5th as well, and then it went to 77. So I still think there's a lot of volatility potential in the chart there. The daily, it's a good sign that we are in the cloud again, back above the Tenkin, like I mentioned last night. This is going to take some time to fully get bullish again. This is a once a quarter signal. So it's going to happen sometime in Q2 if it happens. And you typically don't see multiple go long, go short triggers, at least for BTC historically, within a quarter. It's possible that we get the signal, the go signal, and it fails. But that to me is less relevant. That's manageable. It's whether or not we get the signal at all. That's the important part. So we could still see that inverted head and shoulders type of thing. And part of me just really hopes it's not this diagonal head and shoulders stuff, which is what we could morph into. Not that that would be a bad thing, but it would be something like this. That's just not as clean cut, but equally actionable. You can see it coming ahead of time. Just not as straightforward as a neckline somewhere around 92 and then a potential move back into the lower 80s in early Q2. All of that is obviously just trying to guess what's going to happen here, but it's something to look for. On the calendar this week, we've got PMI today, which was roughly in line with expectations. I don't see any issues there. We've got Bostic today saying that he doesn't think inflation is going to come down to 2% until 2027. So that's where his head's at. And at the end of the week here, this is the big one. Lots of Fed speak, PCE and core PCE coming on Friday. Looking at the current Fed probabilities, we've got no cut expected for May. There's no meeting in April. That number may move towards a cut if the unemployment numbers are hot, which is probably unlikely. That may move more towards a cut if the inflation numbers look better than expected, which I think is likely. But unless we have inflation closer to 2% and unemployment probably closer to 5%, we probably don't see a significant cut expectation for May just yet. I had thought it would be possible if the inflation numbers work their way into the system quick enough to see a jumbo cut for May, but that's not looking very likely based on where the unemployment percentage sits. This is a look at Truflation, 1.78, slightly below 2%, rising from 1.25, not screaming, not hot, not elevated. And if we zoom way out, it's down significantly from where it was post-COVID. So we've got people like Bostic saying we're not going to get down to 2% until 2027 based on how they calculate CPI. Maybe, we'll see. A lot of that has lagging housing data in it. But to me, this was the last mile. The last mile was the past 2 years where we couldn't crack 2% and stay below 2%. And if we can stay below 2%, even with the tariffs, which is asking a lot, on Truflation, then we've already arrived. This is not aggregated. Aggregated, we all know what's happened. Since January 2020, over a quarter of purchasing power is gone, eroded. This is why people are angry. And they're also angry because economists are focused on the year-over-year change and not the aggregate change. But the year-over-year change on the real-time data is there. If we look at the Fed's own inflation nowcasts this month, Friday, we will get a print for February on PCE, which looks to be at about 2.38. And this is continuing to come down next month, now that March is almost over, predicted to be around 2.06 on PCE. CPI 2.46. So this is headed in the right direction still. And again, tariffs can significantly eventually affect these numbers. But as we stand here, expectations and reality are very wide apart. Expectations are runaway inflation, well above 4%. We're not seeing that yet in the data. If we look at the Atlanta Fed's GDP estimator, it's at 1.8 negative. That's because of the gold import value. Now, if we look at the New York Fed, it's at 2.72. Makes you wonder if they talk to each other and they say, hey, maybe one of these calculations is way off. It's hard to know what to believe. If you back out the gold imports from this calculation, you get to about positive 0.4%. The range is still very wide. But if expectations are negative GDP print and we do not see that, I don't know when the final GDP print actually gets released for the quarter, but it's not till Q2. But if expectations are negative GDP and we get positive GDP, then growth fears dissipate, recession fears dissipate. And again, I think that's bullish for risk assets. Looking at the bond complex, TLT, IEF, SHI, AG, these all to me still look very range bound. SHY still looks the best amongst the group, TLT the worst. And if you're rooting for risk, you're probably rooting for these to continue to just range or look uninspiring, which is basically where they're at now. If we isolate AG specifically, we've got inverted head and shoulders potential. But again, you probably don't want this to actually play out if you're bullish BTC, because if this plays out, that's probably because of a flight to safety trade more than anything. So AG above 99.5 probably means BTC below 99.5K, right? Like they probably don't move in the same direction, most likely. So we'll see on that. But a little duration with SHI still looks better than the blend in AG. And then TLT still just doesn't look like much of anything. Now, all of these you can sort of see it, the inverted head and shoulders on the 3-day. It already played out on SHI a little bit. And we are seeing that on the 10-year yield, like I mentioned last night. So we can still see yields come down, prices go up, but broadly, we're not quite there yet. Looking at the S&P, it's just no man's land, really nothing to say on the daily. It's going to take time into April, May before this gets a breakout on the daily. BTC will move first, most likely in early April, so long as SPY can just range. If this just ranges between 590 and 600, perfect. BTC can do fine. Same thing with the Qs, really nothing to do here, just no man's land. Both of these looked like a vanilla bear flag. They didn't break down. We got some news. We got a little catalyst to get people out of a bearish sentiment. But these are still in bear territory. There's no suggestion for otherwise yet. And that won't happen probably until May. But the recovery will take place throughout April. Just to contrast that with KWeb, to me, this kind of looks like SHI, looks like AG. Is it super ready to go? An amazing pattern that has played out? No, right? It's just ranging for years down here. It's at the top of the range now. It looks pretty good. It has a tailwind, but so far it's still kind of stuck at the 35.7 level. Buy, sell, or hold this or MAGS, which is MAG 7 ETF, KWeb or MAGS. What would you do? You'd probably still rather buy KWeb, right? It's going to take some time for MAGS to turn around like the Qs, but this should turn around first, I would think. Probably mid-April, Qs later April. But if you don't have a anti-China bias, you're still probably focused here over the MAG 7. Semiconductor ETF SMH, also just nothing to do. Nothing to do here yet. Still ranging. Really hasn't moved since April 2024. Really has not gone anywhere. Since then, software ETF also trying to bounce, still down considerably since November last year. And much like alts, it's good that there's nothing to do yet. It's good that, to me, that the signals are clear and not sort of murky or wishy-washy. These are all clearly just not in a place that you'd want to take a long. XLE is a little different. It's on the bullish side of a high time frame cloud. Yes, it's been ranging for years at this point, but is it this or KWeb, right? To me, I like XLE a little better than KWeb. This is sitting at or just below all-time highs. And maybe some of the energy M&A starts to unlock and this can finally take off. This is fighting lower gas prices a little bit. I think this does better when gas prices are higher, when oil prices are higher. But it certainly looks like a better chart than SPY to me, even though this has been ranging for quite some time. Utilities, XLU, same deal, just sort of ranging, not really doing much of anything. Probably don't get an answer on this again until Q2. If we start to see data center AI build out, more power demand, this can continue to do well. This could also get a tailwind from just defensive stuff. If the S&P starts to fall apart, utilities, I think, is a more defensive sector, and that's where people tend to go. Also, healthcare, I think, is a little more defensive. So much like the ag chart with the inverted head and shoulders, you probably don't want this XLV healthcare ETF IHS to actually play out. You'll notice it was bearish in Q4 last year when risk was bullish. So some of the most sensitive risk names have bounced a lot today on the tariff news. Generally, we're still kind of in no man's land and leaning bearish on most risk markets, but there's some early signs of things starting to happen on stuff like MSTR, even on BTC. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.